price action remains difficult in the market. We were down 26.50 today, about 1% on the 250K portfolio, and minus 575 trading 2 micros on the 50K portfolio. So this starts the week down 26.50. On the month, minus 15K, and that is about 6% on the month in a market that's just really going sideways, not going anywhere. Quarter still up on the quarter since March the 31st, but just barely, and up on the year. And so difficult price action to navigate. Let's go over the details of that price action and the trades on the day and where we are on the drawdown curve. I want to show you the details of that. And let's take a look here. Winning percentage has been terrible, but look at this price, this market. It looks doesn't look terrible, I guess, if you just quickly look at it. But you have this market that gaps up and then slams down, and so that can generate short trades. We're in this stealth bull market that generates short trades, short signals, and then rallies. And so we started out, we were at right back to break even, almost to break even at this point. Thought the market might move a little more, but we had this kind of a parabolic move down, slow move back to break even, then a parabolic move up, and then slamming again. And so you get this move right here. Looks like the market's about to break out of such a narrow range contraction. You know, there's not a lot of news. We haven't had a lot of news lately. Everyone's waiting on the debt ceiling, and but then it just comes back, takes out these lows, and then rallies again. So what you really have is 2 times during the day where the market tries to generate and pull down longs and generate shorts and then rallies, and then generates short trades and then rallies, but not follow through. We were long at the end of the day. Had it followed through a little bit through these highs, we would have been back up, maybe break even or up a little bit, but it would not follow through to these highs. And so a symmetrical move would be sell off, rally, sell off, and then rally a little bit, enough to be up on the day, but it did not. It contracted here. And if you were watching this market, you notice extremely narrow ranges. Here is 2 o'clock right here. And what happens between 2 o'clock and this is the last 2 hours of trade. Look how narrow this range is. From 2 to 1:30, I was noticing it was less than 24 points in the NASDAQ. 24 points in the NASDAQ. Extremely, extremely narrow. And then through 4 o'clock, the high at 4 o'clock was 13,473.25 through 13,442.75. 31 points in the last 2 hours of trade. So 24 points from 2 o'clock to 3:30, and then 31 points between 2 and 4 p.m. Eastern Standard Time. S&P, the same type of pattern, different point values. NYSE tick, 985 was the high. And just this stealth bull market. I think there's a resistance right here. 13,479 was near the high. 13,480. I think 13,500 is resistance here. And you have some resistance up in the S&P. I think we're ideally set up for a big gap up and a breakout tomorrow. Potentially, it's hard to believe that anything big would happen right now based on all the recent price action. But you know, it just keeps getting. It got rejected at this level on Friday, sold off, bounced back, went up here, rejected at this level, and started to come back here. And you know, oftentimes when you see that, it gaps up overnight. This is the opposite of what we were talking about when the market would sell off and get propped up and then gap down the next day. Now we're kind of in the opposite environment. The market rallies and gets pushed down. It won't break through, and then it gaps up. It could gap up overnight, and then what it does from there is unknown. So we get a gap and go, or we get a gap fill, or a gap fill and go, or a complete sell-off. But you know, I would anticipate that after all this, as it continues to come back to this level and creates this slight downtrend line, it'll break through it, and then we'll see what happens from there. But same thing in the S&P really. And let's look at the trades on the day. Just a low winning percentage of trades. Tick pulse, took that parabolic move, stopped out, minus 625. Not a bad trade overall. This has a history of taking on some nice trades. Tick count trend dynamic turnaround. It came close to its profit target right here with a couple of points, and then pulled back and just stayed in this range all day. opening chop minus 187.50, tick chop minus 50, and in Q, Viper is a hot strategy. His profit target, second trade on the day was a loser, but just a small loser. So this is one hot strategy. You can see it made equity peaks on that first trade and then pulled back a little bit on the second trade. So really strong performance on Viper. This is the last, I guess, 7 months on this setup. And so really good trading in Viper. Tick Pulse NASDAQ, same type of trade. It got in a little earlier, so pretty good entry, but tight stop. I like strategies like this. They lose more often than they win, but when they win, they can capture the big moves. And we are so due for a big move. Doesn't mean we'll get it tomorrow or the next day, but we are so due for a big move. We had our last equity peak on May the 5th. That was a week ago this past Friday, and since then we've just had a lot of chop, a lot of losing trades, a lot of small losing trades in a controlled drawdown. Here is EVP1 catching the end of the day long trade, no follow through. EVP1 long short, took the short trade, no follow through, got stopped out on the trailing stop loss, took the long trade, no follow through. Tick reversal, small gain, zigzag. It's one of our newer strategies, has a pretty good history, but it's just, we put this strategy in here to capture days like today. We put opening chop to capture days like today, momentum reversal to capture days like today, and all these counter trend strategies are a little out of sync right now with this market too, because the ranges are so compressed. There's no follow through, and there's just really a lack of tone in this market. And tick count trend in Q caught this falling knife, and then it was a little bit profitable on the day. And so momentum reversal down on the day. Let's look at the drawdown curve and winning percentage. So the portfolio calculator I have right here is updated through Friday. Not today, but I did add this additional column here for today because it's a losing day, and it would count in the losing column at break even. And so it's less than break even. It's a down day. So we're at 25% winning days. This is the average of the last 12 days. So only 3 days greater than 0 in the last 12 days. And you can see where that falls on this chart. And so it can go below 25% average winning days, but not frequently does it do that. And so it's done that back in 2019. It would fall in lower volatility time periods. And so we're kind of in the lower volatility time period. So it could have drop into a lower winning percentage like this. But since the pandemic, in the 2020s, this portfolio hypothetical back test has not gone through 25%. It has never gone into more than 3 out of the last 12 days as losing days. And so looking for a move higher in this, some winning days in the cycle, not necessarily big winning days, but some winning days. And let's look at the drawdown curve as well. Here is the drawdown curve as of Friday. It was down 14K as of Friday, and 26,162.50, and that is where this is where we are in the drawdown curve. And so let's look at it in the multi-charts portfolio calculator. Closed equity drawdown or closed trade drawdown. You can see we are probably $2,000 or $3,000 away from this point right here. We are at this point on the closed trade drawdown. This is not the end of day drawdown. We explain that. So here's a 30K point, and so you can see it comes to this point quickly at times, and then it rebounds historically. We'll see if it rebounds. We're managing risk here, and we are trading in a very, very different market. Like I said, extremely narrow ranges. To see 25 or 30 point range in the last 2 hours is weird. To see that as we come into a lot of potential uncertainty with the debt ceiling. So overall, it is bullish though, because the market continues to squeeze higher. Just looking at the last couple of times that the market was here, or that the strategies were here, I went back and looked. The next 30 days, it was up 58K here, I believe. One of these is up 58K and the other is 50K. So they bounced from these levels and we're up. And so we'll see if it does that now. Like like I said, the volatility was different. The ranges were bigger to maybe support larger gains, and with the narrow ranges, sometimes you can have a higher percentage of losers. So we are risking another 3K. We are up on the quarter. We're risking about 2.5 to 3K intraday. May cut back on some strategies and wait for it to break out of this range. I don't know if the debt ceiling is just going to cause the market, the potential debt ceiling could, unknown, to cause the market to trade in a narrow range, or if this market is narrow range for another reason. It's hard to say. And then wait till it breaks out or momentum gets going again, because narrow ranges can be extremely difficult to trade. So once again, those are the trades on the day. Looking forward to tomorrow's trade on Tuesday, May the 15th, 2020. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.